I'm doing it on behalf of Sarel, who is unable to make it today. And so what we've got this morning is, as advertised, we've got PPC with Ross. I think you saw in your invite there was Munib. So Munib and Ross worked on this together, but Munib is not able to present as of yet, but he is going to be on the call in case there's any detailed questions on the stock. And then we've also got Matt Swart on board, and we'll just spend about 2-3 minutes at the end of the PPC thing to talk about the Sibanye convertible bond, because it created quite a bit of excitement. I haven't looked right now. I saw Sibanye was up again this morning, but obviously that created quite a bit of this excitement. So without further ado, over to you, Ross.
Cool. Good morning, everyone. My name is Ross Ngola. I cover consumer staples and healthcare. I've taken over PPC on behalf of our previous analyst, who's left us at the moment, but we will get straight into it. Sorry, I'm actually unable to see what's been shared. Are we on the executive summary yet?
Yeah, we are.
Cool. Yeah, so PPC in the last 2 months has had a very strong rally on the back of very, very strong results, following a deleveraging of the balance sheet and an increase in cash and positive EPS numbers whereby they turned over profits. Obviously, for those that don't know, PPC is the premium cement player in South Africa, Botswana, and Zimbabwe, as well as Rwanda, although they recently announced the sale of the Rwandan business, they had 51%, which they've now sold out to a private sector player. As we've seen in the cement game, that there's an oversupply of cement and weak demand, which means that they need to increase their prices to offset the volume declines coming out of South Africa and Botswana, and they're facing a lot of import problems from offshore competitors that reduces the selling price of the cement. So to give credit to my previous analyst, he had a bullish outcome on PPC with a bull recommendation of about R3.70. At the time, the purchase price was at about R2.60, so we've seen a strong rally in the game, and now we have an intrinsic value of about R3.79. If we look at what's been playing out in the EBITDA game for PPC, we've seen good year-on-year changes. Zimbabwe has changed their reporting currency, so we no longer have the hyperinflation problem with the Zimbabwean currency. Now they've converted to a reporting currency of US dollars, which cleans up the balance sheet a bit and makes the reporting a lot easier. And we saw that SA and Botswana, they have a biannual selling price increase of 8.8%, so that would be about 4% per every 6 months, which helped with their revenue. But their volumes are down, but they've increased the price mix. And now we can see that they've changed from a negative HEPS of about 14 cent loss to about a 26-cent gain. I've just taken this PVC cement sales volumes from the company results presentation, and you can see that they're coming off a very low base. After COVID, they saw a spike in sales, as we would expect. Locally, that is SA and Botswana, and Zimbabwe remains quite a driver of their revenue and their HEPS, but they do mention that they've had an adverse effect in weather, especially in the coastal regions, whereby rain will delay the the processing and the construction business on the coast, and then that obviously affects their revenue negatively. They also have mentioned that government has put in plans to help them out when it comes to the importing of cheap and low quality cement from especially Pakistan. But in the words of management, that remains elusive, and we are still waiting to see the help from government for PPC in that regard. This is just on PPC, just what we expect from the revenue and the EBITDA margins. We are seeing a recovery from about 14% up to about 18%, hopefully, and they are implementing positive actions. They are meeting those goals, although we are seeing a change in management recently with a new CEO and the MD of Africa recently resigning, and he'll be gone in December. Sorry, I'm on the returns page. Just to give you a bit of context as to where you were as a PPC shareholder. Year to date, we've seen a nice share gain of just under 80%. This is coming off the back of the share price from about October, November 2020 from about 80 cents, which is now sitting at about R3.70, just under R3.70. So you've had a very positive 3-year share gain, negative if you were a 2-year shareholder, but the volatility in the stock must be noted, and it is one for well, you've made some good money in the last year or so. Just to conclude, South Africa and Botswana, as mentioned by management, the demand remains weak. They do have an oversupply of cement and under demand. Zimbabwe is looking very, very positive, and they've just, from a balance sheet point of view, they've deleveraged very, very nicely. They've approved 200 million rand share buyback, of which they've already concluded about 103 million rand. So you've got another 97 million rand coming in the next 6 months. And our intrinsic value, as mentioned before, is about 379. So a small upside from where it is right now. And then the outlook for the year ahead and next 6 months is just to focus on cost management, hopefully some government support, and if possible to take advantage of structural growth, as government has mentioned a lot of construction projects, but I think as we've seen previously, you just need to be taken into consideration when it comes to the performance of that guidance. And then I'll turn over to the technicals with Sean. And if we've got any questions, and you can fire it my way, and then we'll have Matt talk to us about any about Spania.
Okay, well, good morning, everybody. You can see the chart of PPC. That was until yesterday's close. Like I do every week, it shows the share price is trading above, well, trading far above its 21-day and 40-day moving averages, as well as its 200-day moving average. So both the medium and the long-term trends are bullish. Saying that, the share price, as Ross alluded to now, has recently rallied about 55% off its low. It was at 260. That was in the end of October. And it obviously reached a high of 398. And as Ross said, now we have a intrinsic value of 379, so it's trading in that range at the moment. Since then, the share price has pulled back a bit on some profit taking, but I see that this morning that the share price has bounced back roughly about 2.43% higher. It was last trading at 380, which is around at our intrinsic value. The MACD indicator is trading in overbought territory, obviously top of a cycle, with no clear bullish signals yet. The shorter term stochastic technical indicator is also overbought, but that's looking like it's giving some early bearish signals and crossing down below its what we call the 80% level. So the share is overbought and it gets overbought for quite a while. But the point is, there's no bullish signals, there's no buy signals at this point in time. So I would expect the share price to move back on some profit taking again and move lower and retest that previous resistance at about 325. That will be around about the same level as the 21-day and 40-day moving averages. So that will be offering some support. Should those levels not hold, we could possibly pull all the way back to 3 Rand again, which I think will be a great entry level. Thank you.
Great. Thanks, everyone. Let's spend a couple of minutes if there's any questions. Otherwise, we'll hand over to Matt to give a brief update on Sibanye. We put out a piece on that based on that convertible bond. So they'll be short and sweet. Are there any questions? Okay, that looks like a no. Matt, maybe just give a minute update on the Sibanye and the convertible bond and our views, and then we'll draw it to a close if there's no questions on Sibanye.
Thanks, Vaughan. I'll try do my best to keep it as short as possible. It's a bit harder to keep it shorter than longer, but we'll give it a go. So they early in the week, Sibanye announced they were issuing some convertible bonds, senior unsecured guaranteed convertible bonds. That basically just means that bondholders have got an option to convert their bond into ordinary shares. They can do so at a price which is set in dollars, which is $1.33. That's about 24.5 Rand current exchange rate, but could be much higher if the Rand weakens. And yeah, the shares traded down 20%, and possible reasons for that is because of the dilution effect. Maybe some investors were shorting the shares to buy the bonds, or just shorting it to lower the conversion price. The lower the conversion price, the higher the conversion ratio, which means that they get more shares if they decide to convert. There is a dilutionary impact in this in terms of shares, but the higher the growth in the shares from now, the less impact it is in terms of value going forward. We do like Sibanye. I think the shares were a little bit oversold. What we've done in our valuation is we've assumed that the bonds will be fully converted. So we're assuming that there will be dilution. So it does warrant a downward revision of the intrinsic value, but at these levels, we still think that there's quite a bit of upside on Sibanye. That's probably about as brief as I can make it, but I'm happy to go into further details if we've got any questions.
Great. So if anyone's very excited, I'm sure Matt can do a Black Scholes on the option value in his head. Are there any questions on either Sibanye or PPC? Okay, I think that's it. Okay, guys. Thank you all, guys, and if there's any ladies, thank you for attending our latest call, and we look forward to hosting you next week again. Have a great week and good luck out there. Thanks, Ross. Thanks, Matt. Thanks, Sean. Cheers, everyone. Bye-bye.
Thanks, guys. Cheers.
Cheers, guys. Thank you.